an argument which I often hear: Bitcoin's backed by nothing, therefore it must be worthless. Paper money is backed by nothing.
With rising inflation, bank failures, and massive layoffs across multiple sectors, the future of the economy remains uncertain. It's no wonder the central banks have been getting prepared by stockpiling gold. At ITM Trading, we have spent over 27 years building a team of seasoned researchers and analysts who can help you prepare for any financial crisis. Our experts are ready to provide you with proven strategies to safeguard your wealth and assets in the event of an economic downturn or currency reset, which is frankly inevitable. Don't wait until it's too late. Schedule your free gold and silver strategy call by clicking on the link in the description below.
Welcome back to the Black Swan Capitalist channel. My name is Vandel. Versan here with us as usual. And today joining us again is a dear friend and special guest, Clive Thompson, retired wealth manager. Thank you so much, Clive, for coming on the show again. We're going to have a good conversation. Thank you.
Hello, Vandel, and hello, Versan. Thank you very much for inviting me on your show.
I think the first thing we could begin with is the current status of the dollar. We know the US dollar is under immense pressure. The central banks are saying one thing, they're doing something entirely different, and we can get into that in a little bit. But if you could please bring us up to speed on just the current status of the dollar and what you see going on in the global economy.
First of all, one of the ways which people measure the dollar is by looking at an index known as the DXY, which is the dollar index. And that's been for quite some time trading in the range of 100 to 107. The lower it goes, the worse the dollar is. Currently, it's standing at around 103, right in the middle of the range. But we have to remember that when we're measuring the value of the dollar, we're measuring it against other currencies, which are also falling in buying power at the same speed as the dollar. So we're actually in an environment which has existed ever since we went off the gold standard in 1971 at an accelerated pace, where all currencies are falling together. Of course, there are times when some currencies fall faster than the others. We're seeing right now the Japanese yen is falling pretty fast against most currencies. But we're really in a situation where the money you hold is being depreciated because of them printing more. And it's not just the amount of money in circulation, which is devaluing your currency. It's also the level of the government debt. Now, a lot of people, when they talk about inflation, say, well, inflation is the inflation of the money supply, and the symptom of inflation is rising prices. And that's the historical definition. Rising money supply is the inflation, and the rising prices are the symptom. But in the modern world, we've got another factor, and that is the level of government debt. So for your listeners, I'd just like to explain how that works. Let's say the government borrows $100 because it needs to pay the bills. So it borrows $100 to pay the bills. So someone out there gets that $100, but someone else gets the government bond because they've issued a bond to raise the money. So the government is $100 poorer, but one person's $100 richer because they got Social Security, and another person's $100 richer because he got the bond. So every time the government borrows $1 trillion, the total amount of money on the planet goes up by 2 trillion minus the trillion which has been paid to the government. So effectively, as the government goes deeper and deeper into debt, it's very similar to increasing the money supply. It makes everybody else, the government gets poorer, everybody else gets richer. And of course, that in turn leads to people saying, I'm richer, I can buy more gold, I can buy more equities, I can buy more Bitcoin, I can buy more houses, I can buy more Van Goghs or expensive valuable items, Lamborghinis if I want. So we're in a world where as the governments increase their levels of debt, as the central banks print money, the value of or the amount of what you can buy, certainly when we're talking about rare goods or unusual goods or things which are desired but in limited supply, all of those prices are going to rise. Now, there's many things which don't rise in price. and we don't notice the inflation quite as much as it really is happening. So, for example, if you're buying a new television, it's probably not gone up in price. It's probably gone down. If you're buying a new iPhone, it's probably not gone up in price. Nor have most cars going up in price. Of course, they have done over the decades. But we're living in a world of robotics. So many of the things we consume today are made by robots. So if you buy a pizza, it probably wasn't made by hand. It was probably made by a robot, if it's a frozen pizza in the supermarket anyway. So those sort of things are not showing up in the inflation rate. But if you have savings, you're getting poorer by the rate at which the central bank is printing, or by the rate at which the government is borrowing money. So that's where we are on the inflations, on the monetary inflation side. When you hear the official inflation rate, which they just came out with a few days ago, 3.8% year on year, I think it was, and 0.4% of the month, that's understating the true level of depreciation of your currency. And I think people have to understand that. So if you want to keep pace with the way they're depreciating your currency, just don't hold it. Hold other things is my message.
If you examine the information that's being put out by the central banks, it tells a very different story, because that's exactly what they're doing. Investing in gold, diversifying into emerging markets. It's very concerning that many people they haven't yet realized that the situation that we're all in, and this was orchestrated by the central planners. And I think it just heightens the consequence of the population that blindly follow government and just all these directives without really paying attention to the realities underneath all of it.
That's quite an interesting situation at the moment. We've seen interest rates rise from almost zero to 5%. It's still close to 5% at the short end now. Yet gold price is standing at an all-time record. Now, historically, higher interest rates were the enemy of gold. But the gold price has been rising. And even in the last few weeks, as we've seen, last few days, as we've seen the government, or we've seen the retail price index come out, and it hasn't fallen as much as expected. In other words, the number came in a little bit higher than expected year on year. So inflation isn't falling, which is making people think that interest rates might not be cut at the next meeting or the meeting after that. They may stay where they are, which is normally very bad for gold, yet gold has been rising despite that. So what's happening? Is the public at large buying the gold? Well, absolutely not yet. If you look at the ETFs, the gold ETFs, there's been selling of the ETFs, yet the price of gold's going up. So who's buying? I'll tell you who's buying. It's the central banks of the world who realize that there's a problem coming with the currencies of the world, where we're really in a situation where something is going to go wrong at some point. I don't know when it'll be, and they don't know, but they're preparing themselves, because when it goes wrong and we have to restart the financial system, whoever has the most gold will be calling the shots. Those who have some gold will be sitting at the table to discuss it, and those who have no gold will be told what to do. So the central banks, and that would include banks like the Central Bank of China, Japan, Turkey, are all loading up on gold to prepare themselves for the inevitable when it comes. The only central banks which are not buying gold are most of the European central banks and the United States. But around the world, the other central banks are adding to their gold reserves because they know something's going to go wrong. That is why the gold price is going up, despite the fact the public at large have largely abandoned gold at the moment. But it's only a question of time before the public does wake up. And at that point, gold price will rise a lot.
Yes, absolutely. And on the previous statement you mentioned before he asked you about the gold, you said as they continue currency debasement, the little guy, the average person, gets poorer. And if you own assets, essentially you're getting richer because the prices of assets increase. So one of the key messages there for anybody watching, and I'm just going to reiterate it again, is if you're holding US dollars and currency, you're going to continue to lose in this game. And if you're holding assets, your value of those assets are going to increase. So you'll be winning, essentially, or at least keeping up or fighting true inflation. That's important to note. As for gold, I do have a question about gold, what you just said, Clive. Do you think European Central Bank, or Europe and the US, is not accumulating as fast as other nations' gold because they already have a abundant amount of it ready? Or what's the reason for that? What do you think?
So, certainly there's quite a bit of gold, but it's not evenly divided amongst the European countries. I mean, Great Britain, for example, has very little gold, and I think Germany's got quite a lot. I haven't got the figures in front of me. I think I've been seeing one of the Eastern European nations acquiring gold recently. I can't remember which one it is, so I don't want to say whether it's Poland or Uzbekistan or whatever. I don't remember now. But I periodically look, and it was about 3 or 4 months ago when I last looked, and I saw that there was regular buying going on from the central banks. They only published the figures very irregularly, but the fact is that the buying last year was at a record level by central banks. So they are speeding up in the hurry to get gold, and they're all a little bit in competition with each other, but they don't want to spike the price. So they're trying to do it slowly and carefully. And when the gold price spikes up, they tend to back off a little bit to let it come down again.
And they under-reporting as well, correct?
That's what we hear. I mean, I don't see the motivation for under-reporting, so I'm not really a fan of saying it is under-reporting. I can't see what the motivation to under-report would be. Why wouldn't you say if you bought gold? It's a positive thing to be buying gold, not a negative thing. So I don't know.
I think it's a strategic thing because at the same time, many of these countries, they're also reducing their holdings in U.S. treasuries and they're opting to buy gold. And that's connected to what the Basel III regulations is all about. And we've dove into all of this. Their regulations, they require central banks to have those adequate reserves to cover their liabilities. So I think that's
and of course it's a wonderful thing if you're a central bank and you can print paper money and buy a tangible hard asset like gold.
Yeah.
Counterfeit.
So that's a very good reason to keep. That's a good reason to keep quiet about it, because if you let on that you're doing it, everybody else will do it, and then the price it'll be too late.
Well, I have a quick question. You know how you just said they're preparing for the inevitable currency crisis that's coming. They know it's coming. It's all by design. So they're preparing in advance. And one of the ways is by accumulating gold as much as they possibly can without spiking the price too high. My question is this: when that currency crisis comes, do you think we'll have a sudden dump of the dollar, or will this continue to be a very gradual, slow process? Do you see a point where it's a sudden announcement and a sudden drop? Or how do you see that playing out based on the route we're going now?
Historically, countless currencies have gone out of existence and had to be replaced. And in general, they've gone out of existence slowly, although when you look back on it in history, it does seem rather sudden. But reality is it generally took several years. Of course, it could happen very suddenly, and there could be a sudden spark of crisis. And I think if we look at the dollar in particular, there's so many dollars held by so many people around the world that loss of confidence might come very, very suddenly, and they might have to put in place some restrictions to stop people speculating against the dollar. What does that mean? It means you'll basically find you can't sell your dollars because of some sort of restriction, or you can only sell your dollars with permission. That's just a possibility. I think there's many scenarios out there. And of course, a fast scenario might be a situation where there's a war situation or a natural disaster situation, or just a currency crisis develops very rapidly. We nearly had one 2 years ago in the UK, a year and a half ago in the UK, in the London gilts market, when suddenly the gilt prices started to spiral downwards because there were so many pension funds who had got derivatives on those gilts to try and boost their yield. There's a special kind of derivative which boosted your yield, that when it went beyond a certain point, they were getting margin calls and they were having to dump gilt-edged securities at any price to pay the margin call. Luckily for them, the Bank of England, with the financial support of the British government, stepped in very, very quickly and guaranteed that the bond prices wouldn't fall below a certain level, and they bought everything that was coming at them and stabilized the market, and allowed those pension funds more time to try and figure out how they're going to unwind their derivative type positions. But everywhere you look, there's bound to be derivatives, large derivative positions, and you only need the failure of some counterparty out there in the world for it to set off a chain reaction. So we could have a sudden spike down in the dollar, but it could also be any other currency. It could be the yen, it could be the pound, it could be the euro. And in my opinion, if one starts to go down very rapidly because of a crisis, it could easily cause a panic in all the other currencies, which will force the government into taking immediate action to restrict what you could do with your currency in some way.
The reason I asked that, Clive, is because there's this concept called the Operation Sandman. Now, we're not conspiratorial individuals, but it's basically this concept of all nations coming out at the same time announcing that they're dumping the dollar. It's over, you know, and that can cause a sudden crisis. And it's an interesting theory. Of course, anything is possible. I don't know what the probability of that would be, but that's why I was asking. I'm sure you've heard of it, correct?
I must admit I haven't heard of the Operation Sandman or any conspiracy on that in that respect. I don't think that's very easy to organize, so I'll dismiss it because it'd be very hard to organize a conspiracy like that without it getting out into the open. It would come out.
Well, it'd have to be under some sort of false flag event, and then the following would happen. That's how it would play out if you were really to see something like that occur, like a massive attack in the US on our grid or something like that, and then they would dump the dollar systemically.
Yeah, it could be something like that. It might be engineered by an enemy nation somewhere to gain an advantage.
Or it could be engineered from within and we can just point the finger at someone else. And that's something historically we've done many times. If I can turn this to the banking situation, I know there's a commercial real estate bubble. The FOMC meeting is coming up on March 20th. Also, we saw the bank bailout program that just ended. And I think those two are connected. What they've done is left the central bank with fewer tools to keep playing this game. I think this is going to begin the domino effect to where maybe some smaller regional banks fail. And again, this is part of a massive consolidation phase as well, while debasing the currency further. You see, it's all connected. And I really think that just the domino, this is a catalyst to what we might see this year. And it's so strange because this is coupled also with the Bitcoin halving, the debt restructuring, and then a presidential cycle.
I think it is a little bit worrying what might happen to some banks, especially the regional banks. And Chairman Powell himself has said there are going to be some failures there. And obviously the plan is that the investors will get bailed out within the limit. Is it $250,000 you get in the USA? I forget the figure now, but the guarantee. Now let's talk about Bitcoin, what's going on in the Bitcoin market. Those who haven't been following Bitcoin may or may not know that we had a series of US exchange traded funds approved on the 11th of January. That was a watershed moment for Bitcoin because it literally changed everything forever. Up until then, Bitcoin was, for many, many people, a difficult asset to acquire because they had to deal with offshore crypto exchanges. They maybe had to learn how to do self-custody. They had to understand something which wasn't on their radar screen. It was difficult to deal with. Suddenly, with effect from the 11th of January, they can buy into exchange-traded funds which are invested in Bitcoin, and then they can participate in the price of Bitcoin simply by using their normal brokerage account or their bank or whoever they're used to dealing with. So they're dealing with Fidelity or BlackRock or whichever bank they're dealing with. Unless their bank is refusing to deal in the ETFs, it's as simple as pie now to place an order for the Bitcoin ETFs, just as you place an order for NVIDIA or Microsoft or Apple or any other company. And it's not only Americans for whom this door has been made a lot easier, it's for the entire world, because almost anybody who's an investor around the world has habitually been investing as part of his asset allocation into American equities. And now he's got a very easy way to invest in Bitcoin through the ETFs. Now, why is that good for the ETF price? Because as money goes into the ETF, the whole point about an ETF is it must hold Bitcoin equal to the amount of money which has been invested in it. So they take the money, they invest it in Bitcoin. So as if I go to the stock exchange and I buy 1,000 shares of, for example, the Grayscale Bitcoin ETF or the BlackRock Bitcoin ETF, they in turn, to not directly themselves, but the market makers in turn are going to directly buy Bitcoin to exchange it for units in the fund, which they've just sold to me. So we've been seeing the number of Bitcoins going into these funds, these ETFs, over the period since January, actually, in general, rising a little bit. We're now looking at 10 times as many Bitcoins going in as are being mined daily. So every day at the moment, we have about 900 Bitcoins mined by the miners. That's a fixed number. It's been the same number for the last 4 years. Before that, it was 1,800. Before that, was 3,600. And every 4 years, the number of Bitcoins which are mined drops in half. That's a mathematical formula. It can't be changed. Nobody can do anything about it. So in April, the number of Bitcoins being mined will drop from 900 per day to 450 per day. Yet the amount of money the amount of Bitcoins which these ETFs have been buying have the highest point was 15,000 Bitcoins in a day. But as an average, it's running at about 10 times the number which are mined, so about 9,000 Bitcoins going in a day. And as a consequence, we've seen the price of Bitcoin in 2 months rise from around 40, 45,000, 40,000, depending on when you looked at it, to 65, 72,000 now, that sort of range. I don't know where we are now. I haven't been on my screen, but I think it was about 68,000 this morning. People are putting money into Bitcoin. Now, there's several... I'll just talk a little bit more about the price. One of the factors which I think was also impacting the price of Bitcoin, but it didn't impact it as much negatively as it might have done in other normal circumstances. There's a company called Genesis Holdings, which is in bankruptcy. And at the end of February, the judge authorized them to sell their holding of GBTC. That's Grayscale Bitcoin Investment Equity Bitcoin Trust. And they had about $2.1 billion worth of Bitcoin. And whilst we don't have official confirmation of it, it looks like they've, according to the numbers, it does look very much like they've been selling it over the last 10 days, 12 days or so. So despite that massive selling, which seems to be happening from Genesis, it hasn't really impacted the price on the downside. The market's absorbed that selling and continue to buy Bitcoin, still forcing the price up by something like $1,000 a day. So it's been going very, very well. But perhaps we'll get on to why people are buying Bitcoin as part of their asset allocation and why they think that this is a good plan B to their currency. So first of all, I'd like to just talk about an argument which I often hear, which is Bitcoin's backed by nothing. Therefore, it must be worthless and it's going to zero. It's a Ponzi scheme. So my response to that is the paper money you have in your pocket is backed by nothing, but it's still worth something. Why is it worth something? Because you believe that you can hand it to someone else who will take it, and that person you hand it to believes they can pass it on to someone else for value. Well, the same applies to Bitcoin. It has value because we now have millions of people around the world who are willing to take it, and they believe that they will take it because they believe they can pass it on to somebody else if they want to. Now, obviously, some people will say, well, tell me, Clive, when has anyone ever bought a cup of coffee or pizza with Bitcoin? And there aren't a lot of instances when that's happened. My answer to that is, well, why would you spend your Bitcoin when it's the hardest currency on the planet? You know, if I've got a gold sovereign in my pocket and a cupra nickel pound, but they're both £1 coins, which one am I going to spend first? I'm going to spend the cupra nickel coin and hide away my gold one. So unless we have a total failure of the currency, people are not going to be spending their Bitcoin on day-to-day transactions, but they could if they wanted to, and they would if the merchants said, I don't want your currency. It's like Venezuelan bolivars. It's worthless to me. I want something solid. I want Bitcoin. Now, if the merchants were to start saying that, it'd be very easy to pay them, and we could use what's called the Lightning Net. Now, the Lightning network is faster and more powerful than the Visa or MasterCard transaction system. So literally hundreds of millions of transactions can be done per second on the Lightning Network with Bitcoin if we ever get to that situation. But if we don't, it doesn't matter. People are storing away their Bitcoin because they see it as a store of value. And why do they see it as a store of value? Because other people are willing to take it. And we have what's called the network effect. The larger the network gets, now the network are the people who will take it, the larger number of people can take it, as more and more people are willing to accept it, the more valuable it becomes. And it's a geometric progression. So if you increase the number of people who are willing to take Bitcoin by 10%, the price of Bitcoin is likely to rise by a lot more than 10% because the network is getting bigger. It's like a spider's web. Each connection adds to its value geometrically. So people are literally holding on to the Bitcoin and buying it because they believe it is a store of value now. They believe that someone else will take it. It's obviously not going to be a one-way ticket. We're going to have some incidents. We always have things which happen. There may be some hacks. There may be some government edicts which go push the price down. But this has happened before, many, many times before. And every time it's happened, Bitcoin's had its bad weeks, months, even years, and then it comes back again because the network is now so well established, it's not going to go away.
Yeah.
In that respect, I think people have to realize that it's probably something where you need to have a little bit of Bitcoin. And what I would say to anybody is you need to acquire one essential skill. And if you don't acquire it for yourself, acquire it for your kids. And that skill is to learn to self-custody. Now, that doesn't mean going to buy the ETF on the stock exchange. What it means is using an app on your phone to, or whatever means you've got, or going to a crypto exchange. You buy some Bitcoin, you buy a few $100s worth, or you I'll tell you some ways to do it in a minute. And then for your kids, you put it into a private wallet, a personal wallet for them, and teach them how to self-custody. It might one day save their wealth. It's a bit like teaching your kids to swim. They may never need it, but you teach them to swim because you never know when they might need it. The same thing with self-custody. You might not need it, but if one day we get into a very chaotic situation, there's a lot of civil unrest, and your home is no longer safe, and you can't, the banks are overrun by marauders or who knows what, and I'm sure you can all imagine the kind of situation we might be in some countries. Being able to self-custody your assets in your head or on a bit of paper or secretly locked away, that's the one thing you can move around the world with, your Bitcoin. You can move around the world with it in your head, and you can cross borders. They can search you. They can't find you. You can, wherever you go, it'll always be with you. So that's my message. Learn to safe custody, or teach your kids to safe custody Bitcoin by whatever means you can. And that's the next skill that people have to learn.
Well, first of all, to the audience, Vendel and I, we do teach this in our course, self-custody. It's something we really focus on, and we encourage everyone to learn it. So that's very important. But there is another side to Bitcoin. I'm not going to play devil's advocate right now, but we have to have this discussion privately sometime. Vendel and I, we've done insane amounts of research, and we know that you said the dollar is not backed by anything, for instance, right? It's actually backed by the bond market. But Tether, they also own 15% of all the Bitcoin. They are also one of the largest buyers of US bonds. And I find that very interesting, the fact that they've also managed to avoid 8 financial audits in the past. They still claim publicly that, one USDT is backed by the dollar, but the dollar isn't backed by anything. It's backed by the bonds that no one wants. So there is this revolving door around Bitcoin, Tether, and the dollar.
It must be very convenient for the US Treasury to have a buyer of government bonds, such as Tether, because they are a very big buyer.
Like any bubble, at some point, it will burst. Maybe there will be a correction. Tether will blow up. It's a ticking time bomb. And we go really into length with all this stuff, and we try our best to explain it. It's just very few people really understand the mechanism behind this. So that's just one piece of it. ETFs, which, by the way, killed Bitcoin for what it was supposed to be. If it's a store of value and you have an ETF now, you've invited Wall Street, you've invited corruption, you've invited manipulation. And it's centralized because only a few people own all the Bitcoin.
It's funny because a lot of Bitcoin maximalists, their true intention with Bitcoin and why they're hodlers is because they believe this will be giving them financial sovereignty at some point in the future to be outside the system. But it's very contradicting and ironic at the same time, because as soon as that control was given to BlackRock and now they have these ETFs, it defeated the entire purpose of its creation from its inception. But the holders, the maximalists, are still excited about that. So that's extremely funny, in my opinion, because didn't they want to be out the system, and they're against Wall Street and BlackRock and these, billion-dollar financial institutions, but now the power has been given to them. And I think it's the perfect scenario to control it completely through the ETFs. That's my opinion. Now, I agree with you, Clive. It's, just like the dollar, really backed by nothing but confidence that somebody else will use it. Same thing with Bitcoin as a monetary, tool for the medium of exchange. There's more efficient cryptos and digital assets out there, but for Bitcoin, it will make people money. Most likely, of course, it will go up in price, in value. We are confident about that, but our counter argument here is that because there is no real utility behind it, we believe that at some point that bubble will burst, and it could be orchestrated internally, or it could be because of Tether. And the other argument is, in a world where this new asset class is emerging, crypto, digital assets, for anybody really interested in making money, we believe that there's a number of digital assets with true hard real world utility that are extremely undervalued, that could provide exponential returns beyond what Bitcoin can provide. And just an example, I know we talk about XRP, XLM. By the way, if you guys are watching at the end of the video, we're going to give 2 cryptocurrencies that we personally are invested in and have immense value. But what I was saying was, for example, if you invested, so if the XRP ledger has 100 billion tokens, and for example, it captured only 5% of the 1 quadrillion derivatives market, the result is 50 trillion. So this simple calculation implies the value of $50 trillion divided by 100 billion XRP. That would equal $500 per XRP. So the interesting thing is, XRP's all-time high was about $3.84. So if you put that like $1,000 in there, and it did a percentage gain that high to its all-time high, or even higher, most likely, you'll make way more money and a greater return on investment than buying Bitcoin at the pace that Bitcoin appreciates. So we have a few arguments there, but
the value of Ripple lies in its network. And its network is very extensive. At this point, it's global. Ripple is only facing scrutiny from the SEC. The SEC is an enforcer for the banking institutions like JP Morgan. And by the way, JP Morgan just got fined $350 million for spooking the markets again. So these are the kind of people who are enforcing the SEC to slow down the innovation and what this asset is truly trying to do. It addresses the most challenging problems we're having in the banking system today. That is liquidity. Liquidity is what drives markets. There's shortages, and that's leading to insolvencies. If you look all around the world, the central banks have adopted this technology because I believe they're going to use XRP as a liquidity tool to resolve and make all of them financially whole at some point.
If I was sitting at home and I want to transfer $100 million to Brazil, for example, I would execute an XRP transaction, which would send effectively some message to my bank in Switzerland, where I live, and simultaneously a message to the same bank in Brazil. The bank in Switzerland would debit my account instantly because they got the XRP to prove that I made the transaction, and the bank in Brazil have got the XRP to prove that I made the transaction. They would instantly credit my account or the beneficiary's account with the 100 million, and therefore I wouldn't need to pass through my bank and tell them what to do. I'd just be able to do it instantaneously.
Actually, there's 2 things there that you said that would be eliminated from the whole process. The crediting, there will be no need for that because it's instant settlement, instant liquidity. And the second thing is the messaging, something that Swift does now because the system's so outdated. So those two would be out of the equation. You would send the money, they'd receive it. Done. That's the entire process from A to Z. Instant settlement immediately. And
in different
that's
currencies also.
yes. Now here's the thing. We've actually done it with our father. He lives in Saudi Arabia. So we send money to him. Yeah, I'll send XRP or XLM because it's very fast. He gets it immediately and then sends it to his bank. So yes, that's what I was going to say. Those 2 points are out of the equation. It eliminates that. It eliminates the need for pre-funded accounts, which would free up so much money in the world because it wouldn't have to be sitting in Nostro Vostro accounts, you know? So that would be freed up into the world, into the economy. That's the thing. And the reason is because it's instant, which eliminates exchange and currency exchange fluctuations. Since
Well,
it's instant.
here's a difficult question. You want to send $500,000 to your father, $500,000.
Okay.
You're sending him some XRP, which has a fluctuating value. How do you know he's going to receive $500,000?
It's actually so fast that it doesn't even fluctuate with the currencies. There's no
Okay.
currency fluctuations.
For sure, I have a little bit of exposure here and there to XRP, one through a hedge fund, which I've got anyway. Secondly, some direct exposure. And thirdly, I own some of the Ripple Labs Inc. shares.
Yes, there is
And Ripple
huge
Labs
value
Inc.
there.
They have a big stake in Ripple in XRP too.
With all the central banks buying the gold, the XRP as well, along with the Basel III regulations and the World Gold Council statement on a stablecoin and the World Bank statement on a stablecoin. I think we've sent you these in the past. Be happy to send them to you again. But these documents specifically talk about creating a stablecoin. Whenever anyone asks the CEO of Ripple about stablecoins, he laughs and he disregards the question, saying we're not there yet.
The present situation is governments are very reluctant to let go of the gold they have. However, if we enter into a situation where the currency we know of today is failing or failed, then it will be essential that it is backed up by something tangible, and it's got to be a plausible belief that you can convert it into something tangible. And the obvious answer to that is it should be backed up by gold. Why gold? Because it's what the central banks have got. It's the only thing they got. They can't back it up by their land and say, well, if you want to change your money into a bit of a road or a bit of an airport, you can. That's no use. People are going to want something they can walk away with, which they trust. Perhaps if we look at a little bit of the history of what happened with gold, if we go back to the 1930s and the United States was in a Great Depression, the gold was leaking out of the banks very rapidly because gold was money. You had these $10 and $20 gold coins, and people preferred to take these coins out of the bank and take them home because the banks were failing left, right, and center. In fact, about 5,000 banks failed in the 1930s during the Great Depression. And the only way to get the money back into the banks was what happened with Roosevelt. First of all, he had his bank holiday in starting on the 5th of March in 1933, when they closed down a lot of banks but reopened some, assuring the public they were sound. And he gave a number of speeches called the Fireside Chats, in which he reassured the public, bring your gold back to the bank and it'll be much safer in the bank than under your pillow. But there wasn't enough came back because people still didn't really believe that. So they then issued the Executive Order 6102, which ordered the public at large to turn in all of their gold. And that gold, to some extent, was handed in by the public. They brought their gold coins back to the bank and exchanged them for paper dollars. And at the time, gold was worth about, well, it was worth $20 effectively, or because actually the money was still gold. It was so there was $20 worth of gold, or $20 made that amount of gold. But what Roosevelt did a year later, all that gold had been handed into the Federal Reserve, and so the government still didn't really have it. It was in the hands of the Federal Reserve. So what the government did, they sequestered all of the Federal Reserve's gold and gave them gold certificates, which were repayable in lawful currency. And they passed a law on the same day that they confiscated the gold, saying lawful currency is payable in dollars, not in gold. So the Federal Reserve changed all their dollars all their gold into dollars at $20 an ounce. The next day, Roosevelt revalued gold at $35 an ounce, which meant all of that profit accrued to the Treasury, to the government, and not to the Federal Reserve, who were mightily peeved that they'd just been deprived of a near 100% profit. But the government then passed a law basically saying it's illegal for anyone, any government agency, to give out any gold to anyone, anywhere. And that basically remained the law until 1975. So the governments they hang on to their gold for dear life. So it's only in a national emergency where the currency is failing, they have to do something and restore confidence that they'll let that gold go.
Now, here's the thing. Yes, that's extremely interesting that, they did that. He did that in 1933, and then they revalued it. So we actually think there's going to be another gold revaluation at some point in the near future. We think it's inevitable, and there's enough data to support that claim. So we think that's going to happen.
Have you done a valuation of what it will be?
If we look at global debt, I'm being generous here, but I would say about $40,000-$50,000 an ounce.
What do you think, Clive?
Compared to all the physical gold that has been accumulated and that's out there?
Well, I think you're both right in a way, because there's lots of different ways of doing the maths, but I've done the maths too. If we just take the paper money, and that's the banknotes in your pocket, not the money in your bank or any other money, if we just take the paper money, we're still ending up with a gold price of around $8,000 an ounce. But if we take into account the level of government debt, which is a promise to pay money in the future, then we need a gold price of something like, if it's let's say 1/3 covered by gold, we need a gold price of about 80,000 an ounce.
Okay.
So I think we'll start off by seeing the paper currency and the central bank digital currency run side by side, and every man and woman and child will be free to change his money from his bank or from his pocket into his digital CBDC wallet. And don't forget, CBDC wallet, we have to distinguish that from the money in your bank. It's not your credit card. It's something different. It's the digital equivalent of paper notes in your pocket. You'll probably have two CBDC wallets. You'll have one which is run on your behalf by your bank, and the other one which you'll have in your pocket, which is like the wallet you walk around with. And I'm quite sure that they will, over time, bring in a rule which says that all transactions, whether it be your shopping, your salary, or buying a major purchase or making an investment on the stock market, all purchases must be conducted by a CBDC wallet. So what you would do when we get to that point is you'll have to move your money from your bank to your CBDC wallet. Your bank would do it for you, and then the CBDC wallet will make the purchase on the stock market or the gold or the car or whatever you want to buy. And your salary will probably go into your pocket wallet, on your telephone, and you'll spend that in that way. Now, that's all fine until there's a crisis, and then they tell you, well, as you know, it's law, you've got to use the money in the CBDC wallet. And anyway, nobody's taking the old paper money, and nobody's going to take the money from the bank because it's not allowed. They only take it's passed through the CBDC wallet. We're going to restrict what you can do or move in, how much you can move into your CBDC wallet, or what you can do with it when it's in there. So you may find that you've got a lot of wealth left behind in your bank, which was yesterday convertible 1-to-1 into your CBDC wallets, CBDC dollars. But today, you're only allowed to convert a certain amount of it under certain conditions. And if you're planning to convert it because you want to speculate against the dollar or because you want to do something which they don't approve of, you're restricted. And little by little, that bottleneck gets closed tighter and tighter and tighter until it's no longer possible to move your old money into your CBDC wallet. So your old money is now withering away, as is the national debt of the country concerned, because that national debt is left behind in a defunct currency which nobody can speculate against, nobody can use because it's not spendable. And now you have a government which has got no debt in the new CBDC. It's got a very high debt in the old currency, but as that's it doesn't really matter because that's a currency which is effectively becoming defunct. So the bag holders will be the foreign governments and the investors around the world and pension funds and so forth who hold this government debt, and they'll organize a bailout for the domestic some domestic users up to a point and domestic pension funds. But if you happen to be an international foreign holder, bad luck. I'm all in favor of a digital currency if it is not backed or controlled. Well, if it's not controlled by the government, but I think having it backed by something tangible would be important if we start to go into a situation where the government's debts are going out of control. I mean, we really do have a problem in the Western world with the level of government debt, and I think that's where it's going to break first. I don't know which country. Obviously, Japan has the highest level of debt versus its GDP, but it could break anywhere. We just don't know where it's going to break first. All hell's going to break loose on the financial markets, and that's the point. We're going to need a currency backed by something. If it's digital, so be it. And if XRP is involved, great. But I think people would like to have something which they can rely on. And that means you can take your currency, digital or otherwise, somewhere and get something tangible in exchange, like gold.
I think it will start in England.
It's certainly possible. I think let's face it, all central banks know this is coming.
Yes.
It's not like they're thickos who haven't woken up. They're well aware. They can't say it, that you can't, if you're a central banker, you can't say words which are going to cause panic. You're not going to hear you're not going to hear Janet Yellen saying, "Don't buy treasuries. They're a bunch of crap." She has a used car salesman. She's got something to sell. So when you hear a central banker talking, they're going to tell you everything's fine until it's not.
Maybe you can touch on the BRICS nations and what they're doing there. Obviously, their alignment of thinking is a gold-backed currency.
Historically, nations have traded amongst themselves using dollars as the settlement currency, and that is still very much the case today. But in recent years, there's been a certain weaponization of the dollar by the United States and of other currencies too. And countries are now looking for alternatives so they have a plan B and they can continue to trade. At the moment, I think they're setting up the plan B, which means they will be able to settle Brazilian real for Chinese renminbi in some way, shape, or form. And it's very early stages, but it's growing, and they will still, for a while, continue to do it in dollars. But I think the emphasis on doing it in the domestic currencies will start to shift in that direction, reducing the dollar dominance. We're also seeing some suggestions at the moment that not only will the sanctions against Russia, which are being used to freeze their assets, they are talking about maybe extending those sanctions to be actual confiscation of the assets to hand them over to Ukraine as compensation for war damages. Now, one crime doesn't necessarily justify another, but certainly that threat of confiscation of your assets is hanging over the heads of some nations, particularly those who perhaps don't see eye to eye with the United States. And I think they'd like to reduce their reliance on the American dollar so they have a plan B if things start to go awry, if they fall out for some reason. So I think the dollar dominance it's not going to be very quick, but I think it's going to go down with time. And I think that these other currencies are going to start trading between each other, and certainly it would make a lot of sense to set up a central bank, a bit like the Bank for International Settlements, but an Asian central bank. And I think there is one. I don't know much about it.
Development bank.
That's it. And have each nation should deposit some gold with that central bank, so that settlements can occur by book entries of moving the gold around inside the central bank for these nations. That's the way I would do it as a banker. And of course, it would be perfectly at liberty. Any of these nations would be at liberty to call on the Asian Development Bank to say, please deliver to us our gold. We'd like to put it in our vaults. Now, if that gold happened to be the United States, you've got another problem, because the United States has got to say, yes, you can have it. And we all know there are countless instances, several instances, where the United States basically said to foreign nations, no, you can't have it. The most recent one, which we know about, of course, was when in 1971, when the French had arranged to pick up their gold. They had all these dollars, which were convertible into gold by then at $35 an ounce. They went across to America with their battleship, expecting to pick up their gold, and were told, sorry, you can't have it because we give it to you, we won't have enough for everybody else. And that would be unfair to everybody else. But so you could have some dollars in exchange for your dollars. So they didn't get it then. But if we go back to 1934, every nation could change its gold. The gold was the currency and the dollar was the representation of the gold. So when they revalued gold from $20 an ounce to $35 an ounce in 1934, there were many nations around the world who were mightily pissed off, not least of which the British, who suddenly found that they had they had 100 ounces of gold in dollars. It was dollars they held, paper dollars or book entries, and suddenly it was only worth 50.
They got ripped off.
Daylight robbery, if you ask me. But I mean, I did read there was some. I mean, nobody could do anything about it because you're not going to invade the United States, not in the 1930s when the world's at war anyway. But yeah, so many nations lost half their gold reserves when the dollar was revalued.
Speaking of people or nations losing, I have a quick question and then we'll wrap it up, Clive. You've been so generous with your time. The question I have is, do you see a risk for people with a 401k?
Is always at risk of some kind of bail-in in emergency situations. A bail-in is when the government tells you what you've got to do. And that means they can say to you, if they choose to do so, you must invest XY% in government bonds. And will help. And it's not like you're going to be told to press the button. They'll do it for you.
Next banking crisis comes, they're going to force people to buy bonds. I already know this is going to happen.
Put your money into gold, which is not in the banking system. Put it into, you'll probably be all right with equities, but also put it into real estate or anything. And of course, you've got some other ideas, Bitcoin and so on. Whatever you can find, diversify so it's not all exposed to the banks.
Yes, thank you everybody for watching. The two cryptos that I was going to share that Versan and I have been invested in for a while, still we think they're very undervalued, is VLO. And the second one is SHX. Very intelligent people behind that tech and the company with interesting ties.
It's an amazing world we live in. And
Indeed.
Things are moving very, very fast. And it seems to me that we don't live in the traditional world of where you have to measure everything by value. All that matters is the crowd effect. If the crowd is going for it, you want to be at the front of the crowd and running in the same direction, not standing behind saying they got it wrong.
Agreed.
Absolutely. And just amidst all the challenges that we're facing in the world, I just want people to know that there's countless opportunities for those with vision that can see it and those who will take action. So again, if anybody's interested in doing a one-on-one call with my brother and I, we simplify financial markets, digital assets, cryptocurrency, market cycles, gold, silver, and we connect everything together because they're all intertwined. Just wanted to put that out there, and links will be in the description. Well, again, thank you so much, Clive. It's always good talking with you.
Thank you very much for having me. Speak soon.
Speak soon.